Well, I'm Jagender Rana. The topic of the day is technicalities of marine cargo insurance. Technicalities of marine cargo insurance. So, marine cargo insurance is the oldest form of insurance. Important part of commerce and trade it is for both domestic and international. So, marine cargo insurance is concerned with the inland transits and exports and imports. Mode of transit could be by road, rail, inland waterways, sea, air, registered post, and courier. So, as far as this domestic trade is concerned, sale and distribution of goods within the country is there, and in international trade, exports and imports of goods to and from other countries is there, and the parties involved in the trade are sellers or exporters, buyers or importers, and intermediaries. Now, the custom clearance for export depends on shipping bill or bill of export is the main document required by the customs authorities for allowing shipment. So, the following are the documents required for the processing of the shipping bill. GR forms for shipment to all the countries, packing list mentioning the contents, quantity, gross and net weight of each package, invoices which contains all the relevant particulars like number of packages, quantity, unit rate, total, FOB, CIF, value, correct and full description of the goods, then contract, LC, purchase order of the overseas buyer, both original and duplicate invoice, and inspection or examination certificate. Bill of export for the goods which are cleared by land customs with all the above documents. And the documents required for export are letter of credit. This is applied for making payment for imported claims. Once the imported claims, once the required papers are handed over. So, a letter of credit mainly says that the importer's bank guarantees to pay provided the entire document specified in it are in order. Then the purchase order. It appears like a trade requirement, but it may be desirable for financing. The buyer may need to prove the order to his bank to organize a provisional loan, or customs may desire to see the paperwork to make sure the whole thing is legitimate. Then certificate of origin. So the various countries have limitations on the introduction of commodities from certain other countries and may apply duty to these commodities or ban them altogether. On the other hand, there may be tax benefits on items from a specific supply source. In such cases, an expert will require to present a certificate of origin which is certified by a designated regulatory authority. The next one is bill of lading. This is required shipment document for sea consignments when commodities are sent by sea route. So, as proof that the commodities have been sent by the supplier. Airway bill, same as bill of lading, except that it is a document involved in the air shipment. Then inspection or quality credentials. If the buyer requires an examination of goods prior to shipment, these are vital documents to making sure the deal is established in accordance with the buyer's requirement. Now, packing list. List the list of all of the cardboard boxes within the container and the contents within the boxes. Then invoice, the most essential document. Make sure that a complete synopsis of merchandise is outlined and it is invoiced in the currency of sale. In the other documents, there are other detailed requirements from country to country. For instance, Australia has strict quarantine limitations governing the trade of animals and food items. You would need to secure a permit or subject your items to an inspection or both. Then there are documents required for imports. These are bill of entry, that is import declaration, signed invoice, packing list, bills of lading or bill of lading or ARV bill. Completion of the GATT has been filled in declaration. GATT is German Agreement on Tariff and Trade. So the importer or his customs declaration agent, then approval when necessary, letters of credit or bank draft when necessary, insurance documents, import license or trade license when necessary. Then laboratory or department of chemicals to provide the goods, permitted to make a tax-free. The right tariff exemption certificate, right to tax refund certificate, that is original, catalog detailed technical specifications, related documents. The goods are machinery and equipment to provide spare parts of the chemicals, a single price of machinery and equipment spare parts, certificate of origin, that is application of preferential tariff rates to provide, no commission statement, and pre-declaration, custom declaration, and green channel changes. And intermediaries, commission agents, sell goods on behalf of the principal, clearing and forwarding agents, custom examinations and clearance, arranging conveyance, loss, cargo claims, warehouse keeper, storage, shipping agents, shipping documents, arrange insurance, customs clearance, stowing or space in ship. Then distributors, contractors appointed by shipping companies for loading and unloading of cargo, stowing the cargo inside the ship. Banks provides loan, facilitate trade by issuing LC, that is letter of credit, and exchange of trade documents. Then carriers, etc., various carriers involved in the journey. Then Sales of Goods Act 1924, consensus ad idem in regard to terms of sale between seller and buyer in the country or when they are in different country. Seller and buyer both have obligations to fulfill the terms and conditions of the sale agreement. For better understanding the terms of trade, International Chambers of Commerce brochure attach such definite meaning to various sale terms used internationally. Then every person, then insurable interest. So Marine Insurance Act 1963 says every person has an insurable interest who is interested in a marine adventure. The legal and equitable relation to the adventure or to any insurable property at risk therein, in consequence of which he is bona fide by its safe arrival or prejudiced by its loss or damage, incur liability as a result of such loss, damage or definition or detention. Then insurable interest must be there at the time of loss or damage. The goods may change many hands during transit. So at inception, the insured should have reasonable expectations of a of acquiring such interest. The loss to subject goods may be recovered even if the loss took place even before the insurance was concluded, provided the insured is not aware of it. The lost or not lost makes the cover retrospective, provided good faith has been observed. Underwriters take precaution by denying cover if the transit has commenced before insurance arrangement, means before section 64 VB. So if insured has no interest at the time of loss, he cannot acquire it later after he is aware of the loss. Assignment before or after the loss. A marine insurance policy or certificate is freely assignable when interest passes due to trade requirement, unless prohibited in the policy, like seller's interest clause, duty insurance, SDP, annual policy, increased value, special storage risk insurance. So the insurer has the same defense against the assignee as he had against the assigner. Now, measure of insurable value. In insurance on ships, the insurable value is the value at the commencement of the risk of the ship, including her outfit, provision and stores for the officers and crew, money advanced for seamen's wage and other disbursement incurred to make the ship fit for the voyage or adventure contemplated by the policy, plus the charges of insurance upon the whole. Then measure of insurable value. An insurance on freight, whether paid in advance or otherwise, the insurable value is the gross amount of the freight at the risk of the assured plus the charges of insurance. So an insurance on goods or merchandise, the insurable value is the prime cost of the property insured plus the expenses of and incidental to shipping and the charge of insurance upon the whole. Then indemnity. A contract of marine insurance is a contract whereby the insurers undertake to indemnify the insured in the manner and to the extent agreed in the contract. So in other words, it is not a contract of indemnity ideally, but of an indemnity according to the conventional terms of the bargain. Valued policy is there on the basis of the value of the assignment clear agreed. Unvalued policy on the basis of the value is calculated as per the Marine Insurance Act. So a valued policy is a policy which specifies the agreed value of the subject matter insured, subject to the provisions of the Marine Insurance Act, and in the absence of fraud, the value fixed by the policy is as between the insurer and the assured, conclusive of the insurable value of the subject intended to be insured, whether the loss be total or partial. Unvalued policy is a policy which does not specify the value of the subject matter insured, but subject to the limits of the sum insured, leaves the insurable value to be subsequently ascertained in the manner hereinafter explained as CIF plus percentage. Utmost good faith. The insured is obliged to disclose to the insurer every material information. A circumstance or fact is material if it would affect either the premium or the decision to accept the risks. So the disclosure must be made before the contract is concluded. Failure to properly disclose material facts entitles the insurer to avoid the contract, and the contract is not automatically terminated. The insurer must elect to avoid it and must return the premium. So, examples of material facts: whether the ship was missing at the time the risk was placed, that the ship had gone into port for repairs at the commencement of the voyage, that the ship had gone aground and was leaking, the age of the vessel, that the vessel was generally weak and did not have a certificate required under the Act, the unfavorable claim history of the insured. So the trade contract of sales is the terminology. This is called as the FOB free on board, C&F cost and freight, CIF cost insurance and freight, X works from seller premises, FCA, free to carrier, FAS, free alongside of ship, CPT, carriage paid to freight, CIP, carriage and insurance paid, DF, delivery at front, at border or the nation or nations, DES, delivery at ship, DEQ, delivery ex quay, DDU, delivery due, duty unpaid, and DDP, delivery duty paid as final port. So the responsibility of arranging insurance is cost of freight, that is C&F, buyer, free on board, that is FOB, seller, up to loading on board of ship, and buyer from port uploading. Then free on rails, seller to place goods on wagon, and buyer is responsible afterwards. Cost and insurance, that is C&I, seller. Cost insurance and freight, that is CIF, seller. Ex-works, buyer. Import or export practices, sale against cash payment. Credit sale financed by a bank. Bank finances on the basis of bill of lading, acknowledgement of ship, accepted the goods for onward journey, a title document negotiable, invoice, description of items and price, and then marine cargo policy, collateral security is negotiable. So import export practices, bill of exchange, an unconditional order in writing by exporter to the buyer to whom it is addressed, and then to pay on demand or at a fixed or determinable future date, a certain sum of money to or to the orders of a specified region or to bearer. There are three parties to a bill: drawer, that is creditor; drawee, debtor or acceptor; pay, to receive payment; drawer or a bank obligated. So letter of credit is important. Importer to demand from importer to open a letter of credit in favor of the exporter. This letter is issued by a bank in the importing country in favor of the exporter. It contains an undertaking that bills of exchange drawn by him, that is seller, upon the importer up to the amount specified therein will be honored by it on presentation. So the letter of credit is passed to the seller or his banker, permitting the seller to draw a bill of exchange provided the document of title prescribed by the buyer are tendered. So these are the technical terminologies of the marine insurance, which one must know, whoever is going for insurance or dealing with the insurance, because these technical terms are very important to understand. Thank you very much.